Good morning. I thought I would just drop here in the bookkeeping group and talk a little bit about the latest government incentive or financial measure, which are the bounce back loans. So, an interesting way of naming them, I think. It's a lot more positive than some of the other names of these schemes and imply something quite constructive, quite positive for your business. So if you're a bookkeeper and you've got clients who are, a bit challenged or cheesed off, perhaps they're the sole traders that don't fit the sole trader income support scheme, or perhaps they are small director shareholders and they don't get many of the measures, not many of the measures are eligible for them. So this might be the perfect scheme for them. So what the government have released is a bounce back loan scheme to help small and medium-sized businesses borrow between £2,000 and £50,000. So the government's guaranteeing 100% of the loan, which is great. We've had a lot of call for this, and there's been a lot of people requesting and lobbying for more support from the government for small businesses, particularly in 100% backed loans. So now, it doesn't mean that you can't, you can take out a loan and then expect somebody else to pay it back. Of course not. The way it will work is that government will back it so that the lender gets paid in the event of default, but you, the borrower, will still have to pay this loan and you'll still be responsible for it. Quite how they deal with it in the term of default, we don't really know. I'm guessing it would end up being something like a student loan where you are ultimately responsible for a small repayment to make sure the loan gets paid off. So let's have a look at these government-backed bounce-back schemes in a little bit closer. So what does this mean? So it's 100% guaranteed loan. There'll be no fees to pay, so no arrangement fees, lender fees, anything like that, and no interest to pay for the first 12 months. So I suspect a little bit like the business interruption loan scheme, it won't be that there isn't any interest payable. It means that the government will pay the first 12 months so that it's covered for you. So loan terms will be up to 6 years and there will be no repayment due for the first 12 months. We get a 12-month payment holiday, which is incredible for small businesses that are struggling at the moment. That gives you a full 12 months to take that money, use that money and make it work for you to recover from the impact of this coronavirus and all the horrible things that are happening out there right now. Now, the government is apparently going to work with lenders to agree a low rate of interest for the remaining period of the term, and we don't know what that's going to be yet. Now, we do know that the scheme will be delivered through the network of accredited lenders, so I guess it will be the same lenders that we have for the CBILS and possibly a few more. There are a few criteria for this loan, so you must be based in the UK, must be a UK business. You must have been negatively affected by coronavirus, and you must be a business that was not undertaking difficulty or experienced any difficulty in December 2019, so 31st December 2019. Now, how they're going to police that, we don't know. So the scheme isn't open yet. It opens next Monday, the 4th of May. So I suspect it'll be a form-based application. It's supposedly a quick form that you can fill in and then the money will be with you within sort of 24, 48 hours. So it's a really, really fast turnaround scheme. So it's aimed at helping people who are already in financial difficulty. Now, the question is, how are we going to self-certify? So as bookkeepers and accountants, you're probably going to be taking quite a few questions on this. And the honest answer is at the moment, we just don't know. We don't know whether we're going to be able to apply for our clients and just say, in our expert opinion, the business was okay in 31st of December, but is now undertaking, is now experiencing difficulty. We don't know whether we're going to have to upload a set of accounts or perhaps management accounts or a set of end of year accounts to prove this. I don't know. I suspect it will be just a few ticks on boxes to self-certify, and they're going to be relying on our integrity, both as business owners and bookkeepers, accountants, to make sure that we are giving an informed and comfortable position. Now, if you're the business owner making the claim, again, I suspect it will be you having to self-certify to say that you are experiencing difficulty. Now, it might be that we're expecting to key in some numbers. Maybe there are some headline figures that we can key into fields to demonstrate that this is what our turnover and our profits were at the end of December, and this is the impact. A little bit like an insurance claim. So if you were completing an insurance claim for lost income after a burglary or a business impacting event, you would have to say this is the impact, or this is what my business turnover and my profit margins were like 12 weeks before the incident, and this is what it was like, say, in the next sort of 6 to 8 weeks after the incident. And it's usually that 6 to 8 week period that an insurer will use to verify and work out what your interruption in income is. So it could work a little bit like that. We'll find out on Monday. Now, what can you do as bookkeepers? How can you serve your customers and help your customers more effectively? Well, you could be doing something like this, and you could be recording a short video on what the scheme is all about and how your customers might be affected. You could perhaps have a 3-step process for how you are going to help your customers apply for that loan if they need it. Think about how you can help your customers. Think who might be affected. Think who might need that money and might benefit from it from a business perspective. Now, a loan, like any other loan, is going to have to be repaid. So even though there's a 12-month payment holiday on it, we still need to make sure that the business can afford to repay it. So, how much are those loan repayments likely to be, say, at a 2.5% interest rate or a 5% interest rate? Can you work out what those repayments are likely to be in a year's time and feed those into a cash flow forecast on behalf of your client? Now, trying to do a cash flow forecast 12 months in the future is really, very, very pie in the sky and almost certainly guesswork. But if the business was viable before this all happened, it's highly likely they're going to be viable after it happened. We will return back to normal eventually. So have a think about what you can do as a business, what you as a bookkeeper can do, how you can help your clients, how this cash might help them. And it's another opportunity, potentially, for you to charge for that service or for you to keep those fees going. One of the challenges I think this situation delivers for us is, should we be charging for these extra services? The client generally needs more help and more assistance during times like this. But should we charge for them? I think that's a very personal decision that one business makes to another. We've taken the approach that so long as the client's fees remain flat and they keep paying their usual monthly fee, we'll do whatever it takes to help that client get through this, whatever it takes for them. So whether that means more time furloughing staff, or more time doing cash flow forecasts, or more time and effort doing a business plan to make sure they can get the loan applications in, doesn't matter so long as the client survives. That's our main objective. So we kind of feel like there's a little bit of skin in the game on both sides. We don't feel like we're profiteering from doing this extra work, and I don't feel guilty for charging the normal fees. But if a client wants to cut their fees but still wants us to do extra work, then we have to charge for that extra work, because we can't work on a reduced income yet do more for the client, unless there are sort of exceptional circumstances and you really want to put some sweat equity and some effort in there. So as a bookkeeper, have a look at this loan scheme, have a look at the rules, think about your clients, which ones might be interested, which ones might not be interested, who would benefit from it, who would not benefit from it, and think about how you can help them access these funds and how you can add value. So that's it from me today. If you have any comments or questions, just drop them in the box below and I'll speak to you soon. Bye for now.